Hi there, welcome to Behind the Charts. I'm your host, Dave Keller, here at StockCharts.com. Today, we're going to feature a conversation I had not too long ago with Eddy Elfenbein. Might be a name you may not be familiar with, but what you should be familiar with is his blog called Crossing Wall Street. You see, Eddy was actually one of the first financial bloggers, while others were doing other forms of communication. When the blogosphere was still in its early formative days, Eddy actually created a blog and talked about his views on the markets and how he was making sense of all the information out there. He was a pioneer, and I followed his work for a number of years. In our conversation, we talked about how he got started. We really focused on his transition from blogging about the markets to investing. So he actually has been charged with running an ETF called the CWS, the Crossing Wall Street ETF, which is based off of his methodology that he developed in writing his blog, Crossing Wall Street. And we focus in particular on relative strength. And if there's one tool that I always suggest individual investors make more use of, it's relative strength. So I really enjoyed getting to meet someone whose work I'd followed for so many years, and also his focus on the importance of screening and relative strength. So here's my conversation with Eddy Elfenbein. Hey, we're here at the Orlando Money Show, joined by Eddy Elfenbein. Eddy's the editor of the Growth Stock Advisor. Eddy, it's so good to meet you, and thanks for sitting down with us.
Thanks for having me.
It. So I mentioned right when you sat down, I know your name from years and years ago when I first saw your website. I feel like the first financial blog I ever saw was Crossing Wall Street. And thanks so much for doing that. Can you talk about how you came about starting a blog and what that experience has been like for you?
Sure, it's been a lot of fun. Yeah. So I do go back to some of the very first beginnings of blogging about Wall Street. Yeah. I remember at the time there were blogs around after 9/11, a lot of political blogs, sure, and specialized blogs. And I thought, Wall Street and investing would be a great topic to blog about, yeah, and to give my thoughts and feedback. Yep. Barry Ritholtz was probably the first person I followed, and I've gotten to know Barry and be a friend of his. So he was really one of the keys to get me on. And then after I came on, then some more. And then it really changed not long after I got on that the Wall Street Journal and Barron's and CNBC and places like that started blogging. I remember I was invited on CNBC, and the anchor said, "So what are your bloggers saying?" They didn't even know what it was.
How do we refer to this thing you're doing, right?
They obviously, they thought it was like a chat room. They didn't even know. And now, it's become such a big thing. Sure. And Twitter has merged very well.
Yeah, because that wasn't even around at the time.
That's right. That's right. Yeah. Yep. So it has been and I think just you get great feedback. In fact, I've gotten great tips about investing because I'll say, I'm looking at some company, and then you'll get a reader will say, well, actually, I used to work there, or I work for a competitor. And things the mass of brains that you have is always going to be smarter than the one person.
I love it. I love that.
Yeah.
Can you talk about the time in your career before that moment? What led you to be equipped or be able to write a blog about the markets? How did you learn about the markets? How did you understand them?
Sure. I was always fascinated by the markets, even as a kid, making very small investments.
Okay.
And then really after school, I went to grad school, got my MBA. Okay. And there was a group of us who were focused on just picking equities. And I just found it so thrilling that you can test your thesis in real time and get rewarded or punished for it.
Right.
And I just found it a fantastic exercise. People can have their opinions about politics, but they're never really tested.
Right.
But investing, you are all the time, every day.
Right.
And then after that, I went on the retail brokerage side. I worked as an assistant to a stockbroker. I even did some cold calling. This is back before Stratton Oakmont and all of that. So very interesting. Not a literal boiler room, but very close to that.
Yeah, some similarities.
And kind of a sketchy, but you learn a lot.
Yes.
And then after that, I actually started my own newsletter in the 90s that was read by dozens and dozens of people. But actually then I was featured in the Washington Post. And I was like 25 when that happened. So that was a thrill.
That's great.
So then I went into the newsletter world. Okay. So a lot of people that you see at the Money Show, see Louis Navalier.
Sure.
And I worked with him 20 years ago with his newsletters. So I was in that field. And then I decided to branch off and launch my own blog. The blog I launched in 2005.
Okay, great.
And I do a buy list on that. So every year, say these are the stocks I like. It's a list of 25 stocks.
I remember those articles, yeah.
We don't make any changes for the entire year.
Yeah.
And so I track the results, trying to say, you don't got to do all this trading. You don't have to make it more difficult than it needs to be.
Yeah.
And then so many people have asked about the buy list. Can I invest in that?
Yep.
So then we started 3.5 years ago. I partnered with Advisor Shares, a great ETF provider.
Sure.
And so we took the buy list and we launched a product based on that.
Gotcha.
So it's got a long name. It's the Advisor Shares Focused Equity ETF.
Got it.
The ticker symbol is CWS, which
Crossing
is right
Wall
from Wall
Street.
Street. Yeah. And I've never had the experience before of having to choose a ticker symbol. So I had to go through. I wanted
choosing a name for your child, right? This is a big deal.
And it's listed on NYSE ARCA. Some of your listeners will remember Archipelago.
Of course.
That's what they are.
Yep.
So I got CWS, and I want to know that if the Chicago White Sox want to go public, I'm open. I'm open ears. Make me an offer. But it's been a great experience.
So can you talk about, that's a big, we were talking before we started the interview, it's a big transition from writing about the markets or telling people about markets and actually putting money behind it.
Become a practitioner.
How has that transition been for you? Has that been a positive, a negative experience? What have you learned from that?
Well, my father, who's 85 years old, he said, it's a good thing you didn't write about MMA. So going from writing about it and just spewing your opinion to actually becoming a practitioner. It is amazing because you see it at a different level.
Of course.
So you hear, there are a lot of, they talk about the fees that mutual fund, the fees are too high. And Vanguard, they charge 4.1 basis points.
Yes.
Then I sit down and I have to deal with the lawyer fees and paying for the prospectus and paying the exchange fees.
Turns out it costs money to operate.
It costs money. And I realized, well, it's not so easy having these low fees. And that's a good example. You got to do it. Is the only way you learn.
Yep.
And then one of the parts about it is I like the idea of being in the ivory tower and looking at stock and looking at balance sheets and studying what's going on.
Yeah.
But then there's the practical world that you got to get out there and raise money or else you don't have a workable product.
Yeah.
So luckily, I've had a lot of partners who have been very supportive of the product.
Great.
And so I've been very fortunate in that. But it does change your focus.
I believe it.
Entering the octagon of the real world.
So as you were talking about your career history, I'm guessing then you started looking at stocks seriously maybe like mid-'80s? Is that fair?
Okay. I actually remember when it was August 82. I remember that first bounce.
So that's what I was going to I was going to ask. So so then you're getting the 83, the Dow breaking through 1,000, you have the 87 crash. The 80s were overall net positive, but with some dramatic moments in there. What was that like for you learning stocks during that period? Because a lot of people are learning it, more recently where there's different dynamics. I was
lucky that I cut my teeth on a very difficult time for the market. The 87 crash, you saw nothing like that. And with the circuit breakers nowadays, we'll never see that again. We literally will not.
Yep.
So, and being very young at the time, very caught up in that. Now I'm a little wiser, a little grayer. And so now I see it. But now I've lived through the 2000 bust up, the 2000, 2008 bust up. Yeah. So I've gained some experience. But it was very key living through that initial time when we had things like the deficits. People were very concerned about the blow. And also the disinflation is something, the interest rates were over 10%. Even off the highs in 81, 82.
Yes.
The interest rates were so much higher than what we see now.
Yep.
So it really was a very unique time, a very transitional point, I think, in financial history.
I love it. You mentioned earlier when we were talking about the top 25, like your 25 stocks, and that's what you're basing on. Can you tell a little bit about your process? How do you identify those names? What goes into that?
Sure. Well, what I do is I keep a larger watch list of companies.
Okay.
Actually, my problem is the watch list always gets larger and
Bigger.
larger, so I have to cull it back. And so
Okay.
these are names that I'm familiar with. I know the business, but I don't have a kind of a laser-like focus. I think of it as the minor leagues. This is AAA.
I love it.
And I try to keep it about 80 to 100.
Okay.
They spontaneously I add and detract from it.
Is it all U.S. names that are in there?
No,
Okay.
and I'll go anywhere to find a bargain.
Sure.
And so it's basically companies that I'm familiar with, and I look for, is it down for a reason that's unfair, that really isn't justified?
Okay.
Is it too expensive? So I use that as kind of the short list, if not short, as for replacement. So of the 25 stocks, it's locked and throw away the key for 12 months, and every year we swap in 5 and swap out 5.
And you're limited to only 5 changes.
Exactly.
Oh,
so
wow.
the turnover is just 20. And people think, well, isn't that difficult? And I actually think it's a benefit because I know that when I'm adding a name, I say that on average, this is going to be with me for 5 years.
You better really
and
like
you
this
got to
thing.
think about this. Is this the face I want to see every morning looking at this? And it teaches you think, what is this going to happen over the next 5 years? Think over the last 5 years. We don't know anything about coronavirus or anything, things or elections of Donald Trump, all these things. So you want to go with a company that you are very sure about. And that my process, I think, helps me with that.
Yes. Okay. Can you talk a little bit about any like price technical charting type of inputs that go into your process? Where does that come into how you're thinking about it? How do you use charts in any way in your process?
I'm not really a technician.
Sure.
And I know like my friend like JC Parrots is a super technician. And I know I'd be embarrassed because I'm just not in that language. Sure. But I will say I'm a big fan of charts, and I'm a big fan of StockCharts.
Great. Right.
So on my Twitter feed, I use a chart from StockCharts almost all the time. I'll also say for people who are listening, the solar, do the click down and do the solar backing is the best one. And do the high, low, and close with the thick. At about 3 or 4
You're calling
months,
out your chart style of choice here. This is very aggressive. Okay, this is fine.
I have a strong opinion on these, but I think those are the best.
Those are the ones. Okay,
yeah, and
noted.
I use those. If you follow me, Eddy Elfenbein on Twitter, I use those at least once a day.
So where is it that you would look at a chart like that? Is it at the beginning of the process when you're looking at names? Is it looking at the performance of your stocks over time?
Sort of the performance, and I like to see the trends that are going on.
Yeah.
And I particularly like to see things like, for example, is high beta, is high low vol, like what, is this all being driven by FANG?
Yes.
That's where the charts really are elucidating.
Right.
Like I said, it doesn't really affect my selection process,
Sure.
but just knowing what's been going on. And also I like to see which StockCharts is great with. For example, look at the relative strength of energy, XLE, compared to West Texas.
Yeah.
And you want, is there going to be a divergence? Are they moving together? That's, I think, where charts can really tell you a lot about what's going on.
I love it. I love that. Thinking about the markets now, right? We're in early 2020. We're recording this in early mid-February. S&P pulling off a little bit today, but overall still pretty much at new highs. Bonds overall have been strong. Gold has been strong. Feels like everything's sort of rotated. What are you seeing right now? And I'm sure you put in, is it at the end of the year that you put in your new 25?
Yeah, so I just have.
How do you feel about where they're at right now based on what's happening?
There's two. The overall market, which I think, it's been a remarkably strong market and very resilient. Yeah. Whatever we throw at it, impeachment, it just goes by. Viruses, it just goes right by. And it's been very, and also surprisingly low volatility, which is
agreed.
We had a streak of 74 days in a row without a 1% drop.
Wow.
Now, where I think a story of 2020 is, I think this is going to be an emerging trend, is a style shift to more of those low beta names. And we saw kind of that last week and into this week. It got reversed pretty quickly.
Yes.
But I think a defensive posture will start to, it's more likely that will outperform as a 2020 theme.
I like how you actually, the way you phrased that was subtle but really meaningful. You said it's more likely to do better, right? And a lot of times I feel like investors think in terms of certainties. This is happening or this is happening. And it's really based on probabilities, which is what you sort of laid out there, which is
it's
great.
like Peter Lynch said, if you get 6 out of 10 right, you are a rock
You're
star.
doing great,
You know?
right? Yeah, right. So let's say today was the time when you're shuffling and adding 5 new names to your portfolio. It happens today. Based on what you're seeing and based on what you're doing, can you give us an example of one name or theme or group that you would probably want to include right now based on what you've seen or they think would help you for the remainder of the year?
Let me see. I mean, I'm always been a big fan of a lot of consumer staple stock.
Sure, okay.
A few reasons why. One is I like this very stable earnings line, so you kind of know what's you can sort of plot that out.
Sure.
These things are never go out of business. A lot of the large caps ones in that space are very good companies. They've increased their dividends for many, many years. So I like to see that. Now, these are already on my list, but a company like Church & Dwight, just a really solid name. They make baking soda. They make condoms. That's never going to go out of business.
There will be a need, right? Okay. Good.
Another one that I like this in a different space is Aflac, the duck stock. That's how people know it. Very, very solid company. Most of their business is done in Japan. Very, very high quality name. I've been with them for many years.
Got it. 2 really good ideas. Eddy, I wish this wasn't over. This was fantastic. Really good to get to know you a little bit. Good luck with CWS, with the ETF, and thanks again for crossing Wall Street. I really appreciate all you've done over the years.
Thanks for having me on.
Good to meet you, Eddy.
Okay.
Here with Eddy Elfenbein, here at the Money Show in Orlando.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.